Okay, so diving in today into a pretty dense report, actually, this March 2025 GBD report that you sent over.
Yeah.
And wow, a lot to unpack here. Morality, capitalism, narcissism, global economics, kind of all over the place.
It is a bit of a grab bag of, but I think there are some really interesting connecting threads
Yeah.
between all these different topics. And I think, you're particularly interested in sort of
Yeah.
how these things all kind of come together to shape the forces that are driving the world.
Exactly. Yeah. I mean, how do we make sense of it all? I mean, that's really the mission here, right? So,
Yeah.
I mean, just looking at the report, it really does draw from such a wide range of thinkers.
Yes.
I mean, you've got like the classic economic thinkers like von Mises,
Right.
Friedman, Hayek,
Yeah. The foundational thinkers, I guess you could say, of a lot of free market ideas.
and then you bring in Weber, which is a nice historical perspective.
Yeah. A very different kind of lens, right?
Yeah. And
Yeah.
then mixed in with more contemporary voices like uh,
Like some of the
Stockman and
Yeah.
Wellum.
Yeah, and even that really fascinating section on
Narcissism.
narcissism, yeah, which sort of bridges the gap between individual psychology and
Right. And then you've got this whole global investment outlook section at the end. It's a lot.
yeah, there's a lot there. But I think for someone like you who really values
Yeah.
getting to the core ideas,
Yeah, I don't like to waste time.
yeah, exactly. So I think that's what we'll try to do today is really synthesize all of this
Perfect. That's what I'm hoping for.
and highlight what we think are the key aha moments
Okay.
from this report. And yeah, connect the dots.
Awesome. Well, let's get into it.
Okay, sounds good.
So I guess we could start with this theme of morality and capitalism, right?
Yeah,
Seems to run through a lot of the early parts of the report.
yeah, definitely. And I mean, von Mises, he really sets the tone right from the get-go with a
Yeah, he doesn't hold back.
pretty strong statement. He says, there is no more dangerous menace to civilization than a government of incompetent, corrupt, or vile men.
Mm-hmm. Strong words.
Yeah, and I think it's a really good reminder for all of us that the health of any society,
Right.
and by extension, I think the health of its economic system, really depends on
Yeah.
the ethical character of its leaders, right?
Right.
I mean, if you don't have that basic foundation of integrity, of competence in government,
Yeah.
then everything else is really at risk. I mean, you can look at any number of examples in history, more recently as well, where corruption
Yeah.
has really just crippled economies, crippled societies.
Absolutely. And that concern about good governance seems to pop up in a lot of these thinkers.
Yeah.
Even Friedman, he makes this kind of counterintuitive statement about being thankful for government waste.
Right.
What's he getting at there?
Yeah, it seems a bit odd on the surface, but when you see the full quote,
Right.
I think it becomes a little bit clear. He says, if government is doing bad things, it's only the waste
Yeah.
that prevents the harm from being greater.
Oh.
So, Friedman, being a very strong believer in
Yeah, limited government.
limited government, right?
Yeah.
He's basically saying, look, when the government overreaches,
Right.
it's almost like its own inefficiency, its own wastefulness can actually be
Like a limiting factor.
a limiting factor on
Right.
the damage that it can do.
Interesting. It's a little bit of a
It's a cynical view.
cynical, yeah. A little bit cynical, but
Yeah, but I think, maybe a realistic one.
maybe a realistic take on, yeah, what happens when you have too much concentrated power in one place.
Yeah.
And he, very much also emphasizes individual responsibility, right?
Oh, yeah.
And the power of the free market.
Yeah, absolutely. So he has these very famous views on, parental choice in education.
Right.
And this idea that a business's social responsibility is to increase its profits
Yeah.
within the rules of the game.
Okay.
So, for Friedman, the ethical obligation of a business is to compete fairly.
Right.
Don't deceive, don't defraud.
Yeah.
But within those kind of clear legal and ethical boundaries,
Yeah.
the primary goal is to make profit.
Okay.
And he sees that profit motive, that drive,
Yeah.
as being the engine that really drives economic progress in a free society.
And as for education, he's very much about empowering parents to make choices.
Yeah, absolutely.
As opposed to just having a very centralized top-down system.
Yeah.
Okay. So that's Friedman. And then we've got Hayek, who brings in this really crucial element of the erosion of freedom,
Yeah.
particularly when you have these declared emergencies.
Right, and I think that's something that probably resonates.
Right. I mean, given all that's happened in recent years.
Given what we've seen in recent years, yeah.
Yeah.
Hayek was deeply concerned about
Yeah.
how easily times of crisis can be used to justify
Yeah.
the
Because it's
expansion
state power.
of state power, right?
Yeah. And the restriction of freedom. Yeah.
And the curtailment of individual liberties.
Yeah.
And he also, he also had this worry
Yeah.
that democratic movements,
Uh-huh.
right,
Yeah.
which in theory are supposed to be about empowering people,
Right. Exactly.
could actually end up supporting policies
Yeah.
that lead to the destruction of democracy itself.
Right. Because you get this
You're right. So he saw this.
concentration of power.
Yeah. So he was worried about the growth of monopolies, the growth of centralized control.
Right.
And his concern was that
Yeah.
even with the best of intentions,
Yeah.
sometimes policies that sound good, that seem like they're going to help people,
Yeah.
could actually end up undermining
Undermining the very system they're trying to improve.
undermining freedom
Yeah.
in the long run.
Right. So we've got the warnings from von Mises and Hayek, and then we have Hazlitt jumping in with this pretty direct connection between inflation and socialism.
Yeah. Yeah. Hazlitt, he was very clear that he saw a strong link between those two.
Okay.
He basically viewed inflation as a tool
Yeah.
that enabled the growth of socialist policies.
Because it creates the kind of chaos where those policies start to seem necessary.
Exactly. Yeah. It creates this kind of economic instability
Yeah.
where these policies that might, on the surface sound appealing,
Yeah. Yeah.
start to seem, necessary. Or,
Like the only option.
yeah, like the only way out.
Okay.
So he argued that, inflation and socialism kind of feed off each other
Yeah.
and can lead to this, pretty damaging spiral of economic and political problems.
Okay. But then Hayek also kind of offers a more positive spin on private property,
Yes.
saying that it's not just good for the people who own things, but
Yep.
it actually is a guarantee of freedom
For everybody.
for everyone. How does that work?
Yeah. So Hayek's argument is that when you have private property,
Yeah.
what you're doing is you're distributing control
Right.
over resources, right?
Yeah.
Over the means of production.
Yeah.
You're distributing that control among many
Right.
independent individuals.
Yeah.
Rather than concentrating it in the hands of one entity,
Yeah.
which, often ends up being the state.
Okay. So by spreading it out,
Right.
you prevent too much.
You prevent any single entity from having too much power.
Yeah.
And so even for people who may not own a lot of property themselves, right?
Right. Who aren't the big property owner.
Right. That dispersal of control that private property creates is still vital
Okay.
for protecting their individual liberty.
So I think we've kind of set the stage here
Yeah.
with these big ideas from Mises, Friedman, Hayek, and Hazlitt.
Right.
Kind of about the connection between, freedom and economics. And then you bring in Weber, who gives us this really interesting historical and cultural backdrop. He writes in The Protestant Ethic, and he has this point about, earning money legally in a modern economy
Yeah.
actually reflects virtue and proficiency.
Yeah. So he ties the rise of capitalism to a particular set of cultural and religious values.
Okay.
Right. And he argues that in a modern economic system,
Yeah.
success in your profession,
Yeah.
right?
Yeah.
But success that's achieved through lawful, diligent effort,
Right. Not through cheating or
right? Not through, illegal means.
Yeah.
That kind of success came to be seen as a sign of moral virtue
Okay.
and competence.
Okay.
And so, it provided a kind of ethical and even a kind of spiritual justification for
Yeah.
economic activity.
But I think even more importantly, he makes this really interesting distinction, right, between just the basic human desire to acquire wealth, which has been around forever,
Yeah.
and what is unique about modern capitalism.
Right. Yeah, and I think this is really key for understanding Weber's argument.
Yeah, unpack that for us a bit.
So, he's basically saying that the simple urge to get rich
Right.
is not unique to capitalism.
Right. We've always had that.
That's been around
Yeah.
in various forms, across different eras,
Right. Right.
different societies. But what he says sets modern capitalism apart
Yeah.
is this particular, this rational and continuous pursuit
Okay.
of profit
Yeah.
through through ongoing enterprise.
Okay.
So it's not just about, I want to get rich quick.
Right. It's about a process.
It's about, it's about a systematic approach. It's about reinvestment.
Okay.
It's about a kind of discipline that he argues
Yeah.
can actually, in some ways, even temper
Yeah.
irrational greed.
Yeah.
So the defining spirit of capitalism
Yeah.
for Weber is this methodical, logical approach to wealth creation.
Okay. Yeah.
This relentless drive for perpetually renewed profit through continuous enterprise.
So it's about the system.
Yeah, it's about the way.
Yeah, it's not just about I want to make a bunch of money.
Yeah.
It's about how that process unfolds.
Exactly.
Okay, interesting.
Yeah.
So, okay. Moving on then. We get into this really fascinating part of the report, which seems to have started from a personal question or observation about
narcissism.
Narcissism, yeah?
Yeah. So the report kind of delves into this personal question about, how do we recognize narcissistic traits in ourselves and others, right? And I think the initial observation that the person's friend makes is that, if you're questioning yourself, that's probably a good sign.
Okay, yeah.
You're probably not a narcissist.
Yeah, if you're constantly wondering.
If you're constantly worried about, am I being narcissistic?
Right.
Chances are you're probably not.
Yeah.
Because, people with strong narcissistic tendencies, they typically lack that self-awareness.
Yeah.
And they tend to, project the blame outward onto others.
Right.
So the very act of questioning yourself
is a good sign.
Is a good sign.
Okay.
At least according to this initial observation.
And the friend gives this really good caution. Right?
Yeah.
About just throwing that label around.
Right. Yeah. The friend is very careful to say, look, not everyone who's difficult or who's self-centered is necessarily a narcissist in the clinical sense, right?
Yeah.
Narcissistic traits exist on a spectrum.
Right.
And they can range from, relatively mild self-absorption to genuinely manipulative and even what's termed malignant behavior, right?
Right, where there's really no empathy.
Where empathy is severely impaired,
Yeah.
And that can often border on, sociopathy.
Right, that's a whole other.
Yeah.
Right.
So the key takeaway, I think, is that this is a complex issue.
Right.
And sort of casually labeling people
can be dangerous.
Can actually, downplay the seriousness of the more destructive forms of narcissism.
Okay, but this leads into, I think, a really powerful observation.
Yeah.
It comes from a Dr. Ramani video
right.
that was in the report, and it says, narcissism is always about power.
Yeah, and that I think captures, maybe the core driving force, right?
Yeah.
Behind a lot of narcissistic behavior, this need for control, this need for admiration, this need to feel superior, often fuels their actions.
Yeah.
But yeah, like the report also suggests, I think it's probably more complicated than just a simple, obsession with power.
Right. There are probably a lot of
underlying insecurities, a lot of distorted self-image that's kind of also driving that behavior.
Okay. And then this kind of leads into this analysis of Trumpian policy.
Right.
Using this very memorable analogy of
the box of chocolates.
The box of chocolates, yeah.
Right.
So what is this? Who uses this?
So that's David Stockman.
Okay, yeah.
And he uses that analogy to basically highlight the unpredictability of some of the policy decisions that were being made.
You never know what you're going to get.
You never know what you're going to get.
Right.
Right. He sees it as, a mix of what he considers to be positive developments.
Yeah.
He uses the term bullseye hits.
Okay.
And then more questionable, potentially harmful actions, which he refers to as foul balls.
Okay, interesting.
Yeah.
So what were some of the examples of this?
So the examples range from, things that seem relatively minor, like the stance on paper straws, to much more significant policy shifts.
Yeah.
Involving things like trade policy and even, more kind of out there ideas like annexing Greenland.
Right. So it's a real
it's a very
mixed bag.
Yeah, mixed bag.
Okay. And so it seems like his concern is this lack of, coherent strategic thinking behind these policies.
Precisely. His critique is really centered on the impulsive nature of what he calls, presidential deal making.
Yeah.
And he argues that, the complex problems that the country is facing demand, well thought out, consistent long-term monetary and fiscal policies.
Right.
And he also argues for, a significantly smaller, less intrusive government.
Less intrusive government.
As kind of the way forward. Yeah. So, rather than a series of kind of ad hoc decisions that are driven by
short-term
political calculation.
Yeah.
He's really calling for a more strategic and a more principled approach.
Okay, well, that kind of naturally leads us into the whole discussion around monetary policy and inflation, which is, a big concern that's raised throughout this report.
Yeah, definitely. And, the report expresses this worry that even if we do see a return to what it calls, sound monetary and fiscal policies, it's likely to cause some discomfort.
Discomfort meaning?
Discomfort meaning, some turbulence in the asset markets.
Right. Some correction, maybe?
Yeah, potentially a correction, following this prolonged period of significant monetary expansion that we've been through.
And it also points out that, the money supply has actually turned positive again.
It has, yeah.
But it remains significantly above the historical trend. So what does that tell us?
Yeah. So I think the fact that the the M2 money supply has turned positive again after a period of contraction indicates that while the rate of monetary expansion might have slowed, the overall amount of money circulating in the economy is still significantly higher.
Right, compared
to where it was, pre-2018.
Pre-2019.
2019.
Yeah.
So it makes a full reversal of the price increases that we've seen since then.
Right.
Rather unlikely. I mean, it's kind of like trying to put toothpaste back in the tube once it's...
You can't really undo it.
You can't really undo it, right?
Yeah.
Once it's out there, it's hard to get it all back in.
And Stansberry Research, they kind of offer this very, very direct definition of inflation.
Yeah.
They just say inflation is monetary expansion.
It's just,
And they use this, pretty dramatic increase in M2 since 1960 as their example.
Yeah, so they're coming at it from a very monetarist perspective, right?
Right.
They're basically saying that any sustained increase in the supply of money is the fundamental cause of inflation.
Okay, yeah.
And they also highlight, what they see as an inconsistency in the way that we talk about inflation.
Okay.
So, on the one hand, we often celebrate, asset holders inflation, right?
Yeah.
Rising stock markets, which are often fueled
easy money.
by easy money policies. Yeah.
Yeah.
And yet, at the same time, we complain
about rising prices
for,
consumer
goods and services.
Right.
And they're saying, look, ultimately, both of those things
stem from the same
underlying cause, which is government monetary policy.
Yeah, that makes sense.
Yeah.
Okay. And then the report gets into the U.S. dollar index. And points to this key level to watch, 104.28.
Right.
What's the significance of that for someone who's watching the global markets?
So that level represents what's called a critical 3-year moving average.
Okay.
And the report suggests that, if the dollar index were to fall below that level and remain consistently below that 104.28 mark, that could signal a significant weakening trend for the U.S. dollar, potentially even leading to, a decline, towards the mid to upper 90s.
Wow. Okay.
So, that's a key level.
Right. Something to keep an eye on?
Yeah, because it could have implications for currency valuations. It could impact, international investments.
Right.
So, yeah, it's definitely something to watch.
Okay. And the presenter actually seems to have a more negative view on the dollar than Stephen Hockenberg of
Elliott Wave International.
Elliott Wave, yeah. What's driving that difference?
Yeah, so the presenter's greater skepticism seems to stem partly from, his own experience of the currency markets, having seen how quickly things can change.
Big swings can happen.
Yeah, big swings can happen. But I think more significantly, it seems to be tied to his view of the priorities of the Trump team.
Okay.
Which he characterizes as being composed of, very wealthy asset holders who are unlikely
to want to see a crash.
To want to see, policies that would lead to a crash in the markets.
Okay.
So he's suggesting that there's likely to be this bias towards continued, monetary and fiscal easing.
Yeah.
Even if it means a gradual erosion of the dollar's purchasing power.
Right. And
in real terms.
Prop things up in the nominal sense, but in real terms, we're losing purchasing power.
Right, exactly. So the scenario he's envisioning is one where the stated value of assets might increase. Right, because there's so much money sloshing around.
Yeah.
But their actual purchasing power.
Right.
Particularly relative to something like, gold or silver.
Right.
Would decline.
Okay, so that kind of leads into this idea that precious metals become
a hedge
in that environment.
Yeah,
because they hold their value.
Right. They tend to hold their value better.
Yeah.
During times of currency debasement.
Right. Okay.
Or inflation.
Okay, so we've covered a lot of ground here.
We have.
I mean, we've talked about the role of government, the role of individual responsibility, the potential dangers of inflation, all of that. And then we shift gears a bit, and we bring in Jonathan Wellum with his essay, A Call to Build Back Better.
Yeah, and he brings in this really important dimension of the role of morality in the overall health of society.
Right, so it's a bit of a different perspective.
It is. It's very different from the kind of purely economic analysis that we've been talking about.
Okay, so what's his take on this whole Build Back Better idea?
So Wellum's essay is pretty critical of that agenda.
Okay.
And he argues that, often it serves the interests of the state.
More than the individuals.
More than the individuals, more than the citizens.
Yeah.
And he raises some really fundamental questions about, the potential erosion of civil liberties.
Okay.
In the pursuit of this agenda.
Okay. And he introduces these two concepts, normalcy bias and conformity bias. I mean, those are pretty powerful ideas.
They are.
That he uses to kind of explain why people might not be seeing.
Yeah, why they might be overlooking or downplaying. Yeah.
The warning signs.
The warning signs.
So explain those a little bit more for our listeners.
Yeah, so normalcy bias is this tendency that we have to underestimate the possibility of really significant disruptions. Right?
We think things will always be the way they've always been.
Yeah, we kind of assume that things will continue in this kind of stable, predictable pattern.
Yeah.
And we don't really prepare for
the unexpected.
For the unexpected, right?
Yeah.